Have you ever wondered what would happen if your bank were seized by the Federal Deposit Insurance Corporation? With hundreds of banks still on the Federal Deposit Insurance Corporation watch list for potential failures, it's important to know what to expect in case your bank is next. In this video, we'll explore what happens when your bank is seized by the Federal Deposit Insurance Corporation. When the Federal Deposit Insurance Corporation decides to close a bank, it tries to keep things quiet up until the last minute. This is to prevent a run on the bank, should consumers get wind of the impending action. When they are ready, the folks from the Federal Deposit Insurance Corporation head into the bank and close down operations. This almost always takes place on a Friday. The Federal Deposit Insurance Corporation tries to close down all branches of the bank at once, when possible. The bank is closed over the weekend. The Federal Deposit Insurance Corporation tries very hard to have another bank lined up to take over the failed bank. If this doesn't happen, then the bank is placed under Federal Deposit Insurance Corporation conservatorship, and the Federal Deposit Insurance Corporation runs the bank. This takes time and resources, though, so when possible, the Federal Deposit Insurance Corporation likes some other bank to take over. Whether or not the Federal Deposit Insurance Corporation has someone lined up, many banks are open to the public the following Monday. Federal Deposit Insurance Corporation people spend the weekend with bank employees, managers and owners, figuring out the state of the bank, organizing assets and liabilities. If the Federal Deposit Insurance Corporation has conservatorship of the bank, there is a good chance that it will simply begin cutting checks to consumers and trying to sell other assets. If your bank is closed by the Federal Deposit Insurance Corporation and no other bank takes over, you will get your money. You may have to stand in line for hours or wait a couple of weeks to get your check. If the bank is closed, uncleared transactions may be returned. When the Federal Deposit Insurance Corporation seizes a bank, your money is usually safe. The Federal Deposit Insurance Corporation insures deposit accounts for up to $250,000 per depositor per bank, so if the bank fails, you can still get your money. If someone else has taken over the bank, then your accounts usually transfer to that bank, and you can decide whether or not to leave them there. Debt does not go away when a bank is seized. It is either administered by the new bank that is taken over, or it is sold to another lender. Any loans you have with the failed bank will appear on the balance sheet and be taken care of. Investments made through the bank might be another story. Since these are not Federal Deposit Insurance Corporation insured, you could sustain losses. You will have to double-check. Your cash deposits, as long as you do not exceed $250,000, are insured. However, there are other costs, including those of time and convenience, associated with the Federal Deposit Insurance Corporation seizure of a bank. The resolution of a failed bank can take months or even years, depending on the complexity of the bank's assets and liabilities. The Federal Deposit Insurance Corporation communicates through the bank's website, local news, and mailed notices. Customers must keep contact information up to date to receive important updates. If you have uninsured funds, you may recover some or all of those funds, depending on the proceeds from the bank's liquidation. However, there is no guarantee of full recovery of uninsured funds. Conclusion. In conclusion, it's important to know what happens when your bank is seized by the Federal Deposit Insurance Corporation. Your money is usually safe, but there may be some inconvenience and time delays associated with the seizure. If you have uninsured funds, it's important to keep track of the bank's resolution process to see if you may recover any of those funds. You can prepare for such an eventuality by checking up on the health of your bank and having a backup plan.